hit record. Now, some of you guys may have to click that you're okay with the recording. It may pop up, so. Go ahead, Gilbert.
All right, ladies and gentlemen, connected with the Alliance. Today at our monthly coffee house, we are hosting Maurice Höfgen. He's a German citizen, but did his academic work in economics at the University of Maastricht in the Netherlands. And he, with his group, catapulted themselves into how would you call that? Great reputation because they challenged their economics professors, especially on the textbooks that they were using, in which a lot of myths were being taught. This movement is now international and linked up with Rethinking Economics, which is an international campaign that's already doing similar challenges to the economics profession. And he is here today with us to talk about the differences and similarities between sovereign monetary theory and modern monetary theory. And I'm looking forward to that. But also he will talk about the campaign by Rethinking Economics. And that campaign has the name Rethinking the Role of Banks in Economics Education. We're very glad to have him on here, and Maurice, go ahead.
Well, yeah, about myself, for those who haven't read the description maybe, I studied in Maastricht. I did my master's in Maastricht in economics, unfortunately, I should say, because it's a very neoclassical orthodox program that I was running through. And still keeps being, even after our letter, unfortunately. After my graduation, I decided to take a kind of productive gap year to do some independent research, which mostly falls into MMT or modern monetary theory. Yeah, I'm writing academic papers. I'm authoring a book, which also aims at an average person, if you will. And I'm publishing articles on Macroscope, which is a German online magazine. Yeah, this sort of stuff. Looking forward, I think I will continue my academic career with a PhD sooner or later. And I will, yeah, intensify my study on how our monetary system works and how we can reform or use it for the common good. For today, since I am here for you, my question to you would be, how would you like to proceed? Should I first report a bit about the campaign, the Rethinking the Role of Banks campaign, and then we slide or switch to the discussion about commonalities and differences between MMT and your side, or would you prefer?
Sounds good to me.
As long as the first part is brief,
yeah,
and we move.
Yeah, I'm also more interested in the second part, actually. Yeah. So for the campaign, the initial idea from my side was, well, if we want to bring neoclassical economics to fall, where can we hit them best? And it all comes down to the assumption that money is a scarce resource, that it is neutral, and you can basically ignore it, which they do in their models. So if we could prove this thing wrong, all the other stuff, or a lot of other things would have to go as well. So that was my intention. About 1.5 years later, what we have achieved is unfortunately not much. I mean, we triggered discussions. At some universities, we entered quite serious discussions, and they, for example, well, let me look it up, in Copenhagen and I think also in Warwick, they agreed to at least capture some criticism in their curriculum on the money multiplier or the loanable funds, whichever they are teaching. Sometimes they're even teaching confusing mixes between loanable funds and money multiplier. But anyways, yeah, so it was more about raising attention and discussion. But in terms of change, well, Malta also had some change. They agreed to change their monetary economics module to include, as they call it, the post-Keynesian approach to money creation, and contrast that with a neoclassical approach, which then is the money multiplier. So yeah, I mean, student-wise or attention-wise, I think it was a success because many students are now a bit more critical. But from my experience, I can tell that it's really hard to achieve change with the orthodoxy. Because, I mean, from a psychological standpoint, it's understandable because the people have their careers at risk, and they are trained as neoclassicals themselves. So they put a lot of effort, a lot of investment, both time, money, and energy into it, into learning this stuff and to being able to also teach this stuff. And yeah, now overcoming this and being debunked in a way is psychological tough, which I can understand. But what I've taken away from my work is, I think it was Keynes who said, if information changes, I alter my conclusions. I think it's hard to keep up with that, but at least that should be the guiding principle. Yeah, so much for the report. Happy to take questions on that.
I have one small question. Just I've read and worked a little bit with Kate Raworth's work, and you know I saw her name on the Rethinking Economics page, and I just wonder what her role, you know, and I know in her Donut Economics she begins and ends with sort of current economic students, and so I wonder if you could just share what her role has been in the work in Netherlands or the broader work in Rethinking Economics.
Yeah, so maybe also to clarify, the thing started in Maastricht, actually. I wrote the letter and penned it to our department. And then afterwards, we brought it to Rethinking Economics and made it into an international movement. And in that sense, Kate Raworth and other economists were asked to join the campaign, to sign the letter, and maybe also to as Steve Keen, for example, did, promote the campaign by delivering promotional videos or giving some lectures. For Kate Raworth, I think she just signed the letter. Yeah. But also on the Rethinking Economics page, there are some opinion pieces from Dirk Ehns, from Andrea Terzi, then the video of Steve Keen showing his Minsky model. So yeah. And in terms of
go by the stack system. Sorry, Maurice. If people have questions, that system, you know, somebody either writes in the chat room stack or to say stack, and that will be the first person to be able to do to pose a question.
Yeah, fine.
Anybody else? Otherwise, I'll have a question.
I have a question. So,
Tom, go ahead.
So, Maurice, did you work with a group of students at Maastricht to generate this letter yourself? So you have a sort of an active economics club or whatever it is that that students are really involved with?
Yeah, that's true.
Okay, good.
Yeah. And next to our, say, activism and changing the curriculum, we are also involved in organizing lectures or events ourselves. So we're doing both ways. And actually an interesting quote that we got from our department in Maastricht was, you either are an activist or you are an academic. You cannot do both, which is ridiculous.
Crazy.
That's very un-Dutch.
Yeah, true.
Is it? Or are you being sarcastic?
No, no, no. The Dutch like their activism also, and they're sometimes being taken for task to be moralistic on the international scene, and there's something of, you know, combination of being very progressive and also very oh, what is that? Very religious, also Protestant, and that combination sometimes results into so-called Dutch moralism in the international scene. Sometimes annoying, but mostly they're spot on.
Another.
So anyway, my question is,
oh, yeah, go ahead.
What's your relationship, if any, with American groups? I try to invite and get connected with a group in San Francisco, a group in Canada, some others, and I didn't hear anything. I tried and tried and didn't hear. So what can you tell us about what might be going on with Rethinking Economics campaign in the United States or Mexico? I also tried to, there's a group in Mexico City, but I didn't hear from them either.
From what I know, there was only a group in Canada, which was active, speaking of North America. But besides that, at least I don't know. I don't know much about any action that went on there. But I was also on the content side and steering or making sure that the content of the letter is how it should be, and drafting responses and that sort of stuff, and not on the, say, organizational marketing side. But well, after this talk, I can get in touch with someone who might have more knowledge about that, if that would be of interest for you.
Absolutely, yeah.
Okay.
Are you organizing anything big, conference or meetings or something to make another splash?
We haven't decided yet, so we are still in the process of getting responses from the departments, which is a bit of a hassle because you have to individually answer in individual manner and make sure, or take the how you say, political dynamics at each department into account, and all the rest of it. So yeah, so it's a very slow process, unfortunately.
Yeah. No professors yet on board then. You're saying that they are very conservative, very committed. I mean, the joke is that, you know, if you have a paradigm change, it will only change in academia one death at a time.
Yeah, true. Oh, yeah. In Maastricht, they called the open letter a declaration of war.
Oh.
Yeah, that's the rhetoric they were using.
Was there any debates, maybe? You know, the Dutch are very good to put a debate on stage in cafes or in, you know, in a theater.
Yeah. We proposed it, but it was denied, and then we met with a few professors, and then the first part of the first 50% of this meeting were just about blaming us why we didn't engage with them before, but used the way, the activist way of going with an open letter. But afterwards, we went through the balance sheets, and they were making up ad hoc modifications of their models. But, well, they weren't. If people are not prepared already to change their mind, you can do anything. You can, if they want to believe that the world is flat, well, how do you prove otherwise?
No, that's true. Okay, let me throw you a last question here. And what's your relationship with the Ons Geld group of activists, and you know, they're pretty successful with their parliamentary moves. What's your relationship with them?
At one point, we had an exchange with them, which was sympathetic, but afterwards there was not much coordination or relation at all. So yeah, not much to report.
I'm very sorry to hear that.
Yeah.
Again, very un-Dutch.
Yeah, maybe. But also like in the Pine movement, if at least for Maastricht, I think we are all internationals and most of them actually are Germans. So maybe
Oh.
that's why.
Interesting, interesting.
Yeah.
All right, thank you. Okay, who was next? I think Stephen raised his hand. Stephen, you're muted.
Yeah, I was going to ask the ONSCAL question because how popular is ONSCAL in the Netherlands compared to your movement? Are you guys both near zero popularity, or is one known a little bit better than the other?
So I think ONSCAL is more popular than at least than Pine Maastricht. There is another organization called Pine Netherlands, which is supposed to cover the whole of Netherlands, but it's a student-run initiative, which isn't the case for ONSCAL, right?
Right.
So yeah, I think they have way more resources, and yeah, that's why they are more popular.
And why can't you really connect? You know, it seems like they should be able to take on, or does this get into part 2 of our conversation?
Well, good question. I don't have a good answer for that, but I'll take a note on that. That's definitely something we should consider going forward.
Okay, well, maybe we should start part 2 if there's no more questions.
I just want to.
I got a little question in the chat room. Just a quick explanation of what PINE stands for.
Yeah.
Okay, PINE is an acronym for Pluralism in Economics Education, and it holds the view that currently there's a monism, only teaching neoclassical economics and only teaching economics as if it were a natural science. And we want to overcome that because social sciences need a pluralistic view to be well informed. So yeah, that's basically the proposition.
Anybody else questions on?
Yeah, I have just a quick comment. Is there the conference that I went to was in 2014, and it was put on by the Modern Money Network. Rethinking Economics. It was a 3-day conference. Is that part of the same organization?
Well, the Modern Money Network is different from the Rethinking Economics. Rethinking Economics is more aligned with pluralism in economics, so diversifying economic curriculum, etc. And Modern Money Network is more aligned with forwarding the idea of MMT.
Okay, I don't think MMT was that well publicized back then, and the conference was actually a 3-day student-run conference on economic pluralism.
Okay.
So.
Are you sure that was organized by the Modern Money Network?
Yeah.
Okay.
Yeah. So I guess things have changed, evolved a little bit since.
Yeah. I mean, the Modern Money Network is also student-run, so. Yeah.
It was a very good conference too. A lot of big name economists were there. Yeah.
And there is also quite an overlap in trying to diversify the curriculum and trying to overcome neoclassical economics. So you go in the same direction, but then you turn into different directions, which is let's go for MMT or let's go for pluralist education.
Right. Okay. Thank you.
Anybody else? If not, Maurice, take it away on this very, for us, very important issue on the difference and the similarities. Because there is some almost acrimonious exchanges happening, and it almost became campified, if I can use a word for that. So we're always looking for bridges. And I hope you can add some material to the bridge.
Yeah, I hope so too.
Go ahead.
So, well, first of all, I think, using an analogy here, we are not on different sides of the river, but on the one side of the river, there's this neoclassical, neoliberal stuff, and we both crossed the river already, but now MMT and the sovereign money reform might want to go into different directions, but we are still on the same side, I would say. And before I start, if you feel that I'm misrepresenting your point of view at any point in time, please feel free to interrupt me. Right ahead.
Can you say what the river is that we cross together?
Well,
I know on the other side is
neoclassical economics, yeah, which thinks that, well, maybe it becomes clearer if I start with the commonalities, because, well, MMT and SMR have both think that money matters and money is neutral, and banks are intermediaries and banks matter in that sense. And this is at the very basic of neoclassical economics. So for this part, I think we agree. And even speaking more generally, I think your aim, if I understood you correctly, is to reform the economic system and the monetary system to achieve a just or more just and sustainable society, reduce inequality, leave no one behind. So I think this very aim is a commonality between MMT proponents and your side. Besides, as I mentioned, we both agree that money matters. Money being the most important institution probably in a capitalist economy, which links to Marx actually. But still, I think we both agree that money matters, which puts us into contrast to the neoclassical side, which thinks money is a neutral thing. We also agree on the fact that banks create money by granting loans, which goes with the credit creation theory. And the way they are doing this right now brings some problems with it. First and foremost, that the profit motive as a guiding principle is not aligned with what society deserves or with a public purpose, if I should frame it in that sense. So profit motive leads to the fact that loans are made for brown industry, which is highly profitable, but not made for green industry, which is still in the very first steps. On top of that, we can see this debt shift occurring, that bank lending goes more and more into unproductive, non-GDP relevant action, leading to asset inflation, leading to inequality, and all this sort of stuff. And also the profit motive leads to the fact that bank lending is pro-cyclical, so it fuels booms and it worsens recessions. So I think this is all perfectly acknowledged by MMT, and in that sense we are both on the same side. And also I've just read the MMT piece from Joseph Huber. He claimed that MMT does not see a need for reform, which I think is not justified, because Randy Ray and Warren Mosler actually put forward quite some proposals for reforming the banking system. And since MMT perfectly acknowledges these problems that I've just mentioned, I think we are both on the same side that banking needs to be reformed. For the MMT side, this would take making banking boring, maybe, if I can frame it like this. So no securitization, no financial collateral to be accepted for loans, no subsidiaries, not selling loans, not buy or sell credit default insurances and all the rest of it. On top of that, I think we both agree that the public purpose of banking is to facilitate loans based on credit analysis. This is a baseline. And on top of that, now leaving the banking bubble, speaking of government finances, I think you're quite critical about the operational practice of issuing government bonds, as you framed it, or as Joseph Huber framed it, for financing purposes, which is nothing that MMT would ascribe to. But MMT also is on your board in saying that issuing bonds could be done in a better way, and it is a basic income for banks because it allows them to earn interest for nothing, basically. So that's what I have for the commonalities. Maybe we leave it with that, and if you have any questions or you don't agree with anything I've just said, we can discuss that and maybe then turn to the differences.
I have a comment on that. I think you kind of nailed it right there. MMT is very much focused on banking reform. Monetary reform banking reform kind of falls out as an automatic in the process of monetary reform.
Mm.
So,
can you get a little closer to your microphone?
oh, I'm sorry. Is this
But I got
better? Okay, so I have heard Randy Ray say that they are not interested in monetary reform. I mean, I just heard him flat out say that. And so there's a lot of confusion, and I think maybe even an evolution in the message, in the MMT message. That's as the years go by, it may be getting refined. But I do want to point out that MMT is very bank-centric. Monetary reform is money-centric, and I think that is a fundamental difference between it. So I don't think Huber is really wrong. I'm not sure if he, from that, if you look at it from that standpoint.
Yeah, I would agree with that. The reason being that the MMT point of view is that even with the current setup of the monetary system, so issuing bonds, the government not being allowed to run overdrafts at its central bank, and all this sort of stuff, you can still capture or utilize the full power of the monetary system. And I think that's maybe where MMT and SMR disagree.
Mm-hmm.
But yeah, just to clarify the reason. But I agree with your stance that it's not centric or central to MMT that they want to reform the monetary system. Yeah.
Next is Stephen there.
Maurice, in your talk just now, you mentioned credit insurance, and I was wondering what you're referring to. And I'll give it to you this way. Another approach towards monetary reform that we would be in agreement with, like in the United States, is taking out what's called Federal Deposit Insurance Corp. Mm-hmm. And if you take away insurance that backs up the bank's ill use of our money, or of creating money too, in our view, that would be another way where depositors would turn to other banks or try to get a central bank digital account or something. But when you said credit insurance, what were you referring to there, please?
It was more about credit default insurance, so that the bank sells a credit or gives credit, and then can insure itself against this credit being defaulted. How
does it get that insurance? Is it public insurance or private insurance?
No, in this case, it's private insurance. Speaking of public insurance, you're referring to the deposit guarantee or federal deposit insurance, right?
Yes.
On this note, I actually think there should be 100% guarantee without a limit, because otherwise the customer of banks would have to assess the health of a bank, whether to decide whether he or she trusts the banks to not go bankrupt and not to lose money. And I think that's not practical. But instead, banks should be regulated in a way that you as a customer can trust them, and the government backs that.
Okay, well, at some point, maybe we'll have a separate proposal for you too. on that. We thought a bit about that, and we have, I don't know, I think we have another way to go forward on how to resolve that issue.
Mm-hmm.
But anyhow.
Next, I got Mary on chat or on Stack. And you're muted still, Mary.
You're muted, Mary.
Okay.
There you go.
Thank you.
Hello.
Well, I wanted to clarify something I understood you to say, Maurice.
Yeah.
That, let's see if this is right, that MMT does not support government financing other than through bonds because, did I hear you say, because the banks need the income?
No, I said that the current way, first of all, I wouldn't ascribe to bond issuance being a finance operation. It's more about interest rate maintenance. But in your language, the borrowing part, so bond issuance for financing the government is basically a basic income for the banks, because they receive interest for taking the risk-free but interest-bearing government bonds.
So I think I did understand you right, that it's because the banks need that work, that income, that interest.
I mean,
That's
I
why
don't
we
know,
support that.
but they are happy to take it.
No, he wants to discourage that.
Yeah, that seems a little outrageous to me.
What?
Well, it seems a little outrageous to me that we would, for the public needs, the common good, all the things that we share, MMT also wants to have a better future, that the government should have to borrow the money and pay interest on it. That's a big sticking point for me.
Well, from MMT perspective, the government does not borrow money. We can. I don't know whether we should dig into it right now. I mean, we can.
What about those bonds? How is that not borrowing money?
So the question,
Go ahead, Lucille.
yes, I mean, I was going to ask, given your answer to Mary, that the reason the bonding continues, what it seemed like you were saying was that it serves the bank's interest. It provides interest for the bondholders, whoever they are, which includes a lot of banks. So the follow-up question that maybe you're about to answer is, where does the government get its money from?
Let's turn the question around. Where do the banks get the money from to purchase the bonds in the first place?
I know the answer to that, but my question is, where does the government get its money from?
Well, technically, sorry, coming in. So
Yeah, I didn't say anything.
not taxes, and it's not bonds, but well, the government has its own bank, the central bank, and if the government absents all institutional, say, self-imposed rules, it advises, or it says, or I should say, it instructs its central bank to credit the bank account of the recipient of the payment. So the government says, please, dear central bank, credit the bank account of Maurice, say, right? So the central bank account of the bank goes up and the bank account of the recipient goes up. Now you have a surplus of reserves, central bank reserves, or high-powered money, but let's just go with reserves. You have a surplus of reserves in the interbank market, which puts downward pressure on the interest rate. And to drain those surplus of reserves, the government or the central bank, whoever, it actually doesn't matter, issues bonds or sells bonds to the banks to drain those excess reserves from the interbank market, thereby stabilizing the interbank interest rate, or for your case, the Fed funds rate. And in that sense, bond issuance is an interest rate maintenance operation. It's monetary policy, it's not fiscal policy. Was that kind of clear?
Add to that? Or ask for clarification, or?
I wouldn't mind it being said again because you lost me in the process of
Yeah,
it.
I think the language that MMT uses can be confusing in terms of draining the reserves and.
Do it again, a little slower.
Okay, so I'll go again. If the government spends, it instructs its central bank to credit the central bank account of the bank of the recipient. So if the government spends, central bank account of the banking sector goes up, and the bank account of the private sector, non-bank sector, goes up. Is that okay?
You're basically saying that the central bank is creating new money.
Yeah.
It's the same process that a commercial bank is making a loan to an ordinary person. It's just at the level of the central bank making a loan to a private person. Is that what you're saying? Or
yeah, that's what I'm saying. Yeah, absent current self-imposed regulations, say, or constraints. But that's the basic case.
Okay, but how is that not fundamentally borrowing? Because you on the balance sheet, you're putting in an IOU to balance a newly created money. I mean, in terms of the essence of how that balancing process on the balance sheet goes, it's the same whether you're talking about the process at a commercial bank level for individual loans, or you're looking at that process at the central bank level for new money being created for the government. The government is offering its IOU in exchange for that money creation.
Well, if the government spends, it creates a new liability in the central bank balance sheet, but it doesn't create an asset, right?
Yeah, that's called debt or borrowing, right?
Well, the bond is the asset, right?
I mean,
well, if the bond comes in, that's then the asset, and the bond is the illiquid exchange for the liquid reserves.
Yeah. Maurice, we have a little bit of a different understanding on that point. When the government spends, you've just said something very interesting to us. You said it creates money on the liability side, but does not create an asset to go with it on the corresponding side. In my thinking, I don't see the government as creating money at that point. It's still, I don't think, in my knowledge, say if the government wants to use its accounts, in our case, the U.S. Treasury has 2 accounts at the Fed, and it's one of those is its main operating account. So if the Treasury wants to spend money or get money into someone's account, the reserves or the account balance goes down at the Fed, the Treasury account balance goes down at the Fed as a recipient's bank account receives the money. So you don't have that understanding as I'm thinking, do you?
Well, I do, but that's only due to the current institutional setup. In absent those self-imposed constraints, your constraint is, or the constraint for the US is that it is not allowed to run an overdraft at its central bank. So if you put central bank and government together, both accounts would cut out each other, and you wouldn't have to consider the reserve account of the government. It would just be consolidated government, and then spending would mean you just create liabilities, IOUs, and if you tax, you decrease or delete IOUs, liabilities on your side.
Right. We actually have a law in this country that goes, or it's called the rule, it comes from 1951, that says the Federal Reserve cannot create money directly or fund the government to any unlimited extent. The Fed cannot create
bonds.
money for the government, in essence.
It can't purchase bonds.
Yeah. Only on the secondary market.
It seems like an MMT, they get around that rule by still spending, and the Fed covers them, I guess.
Well, but if you go through the balance sheets, I can send you 2 balance sheet examples later on.
Okay.
It actually doesn't matter whether the spending is done by running an overdraft at the central bank, by having the central bank buying bonds directly from the Treasury, or by having the central bank financing the capital market and the capital market financing the government. In the end, the outcome still is that government spending increases central bank interest, increases the bank accounts of the private sector. So the government deficits ends up being a surplus for the private sector. And then the question with bonds is whether you leave the reserve, the central bank money in the system, in the interbank market. If you do so, it puts downward pressure on the interest rate, the interbank interest rate, the Fed funds rate. If you drain it by selling by selling bonds in exchange for reserves, you achieve a certain interest rate target, which is what the Fed wants.
Okay, let's go back to government deficit and overdrafts for a second. You mentioned that the government has an overdraft at the Fed. In the United States, we actually have a law against that. It's called the debt ceiling. And before the government is allowed to have an overdraft at the central bank, Congress has to pass the issuance of bonds to cover that overdraft.
Yeah.
But the bonds come first before the overdraft.
Sure.
Go ahead.
In that instance, you are right. But before the bonds are bought by the banks need to get central bank money to buy those bonds. And the Federal Reserve will always make sure that there are enough reserves for the banks to buy the bonds issued by the government, so that the bond issuance doesn't bounce. Right? So it doesn't matter whether the central bank finances the government directly, if you will, or whether it finances the capital market and the capital market finances the government. There's no difference. The balance sheets at the very end still look the same.
What about the interest attached to those assets?
Well, then, yeah, in the current setup where bonds are issued to the private sector earns interest. Whereas if bonds were sold to the central bank directly, or there weren't any bond selling and the treasury would just run overdraft, then no interest for the banks. That's what I said. Bond issuance is basic income for the banks.
Yeah, the problem we have, another way we would be on the same side of the river, totally in the same ship or boat or wherever, is that it's in this law, the Fed cannot buy directly. This goes back to 1951. The Fed cannot buy directly US government bonds.
Before that,
Before that, you know.
1932.
Okay,
Yeah.
whenever, Paul. It gets recodified, I think, in 51.
Yes, that's correct. Yeah.
Okay. So, because World War II made an exception of that.
That's right.
Right, okay, so just small points along the way, Maurice, for us, you know, internally here. So, so we have that law that the bond, the Fed cannot buy U.S. government bonds directly.
Yeah.
But if it could, the banks wouldn't earn the interest, but that would be okay for us. We would be totally happy with that.
Sure.
And the problem would be then is, would government tell the Fed to keep buying and buying, and that would be a source of inflation? Well, then the government has to be careful, or has to set up some type of public administration that prevents it from, or a monetary authority, we would call it, to prevent it from creating too many bonds purchases by the Fed directly.
Yeah.
What say you?
What we have now is that government spends too little, otherwise there wouldn't be any unemployment, because it basically has all the financial means to bring those people into employment. But unemployment is less
At that point, government would have enough money if it could create the money. We don't see it being able to create the money because it needs to make those bond purchases at an interest rate. And the interest rate is not a small amount of money. It's about $500 billion a year.
How does it pay the interest rate? The interest, sorry.
It through taxes, revenues, and more of creating additional bonds to pay the earlier bonds, and it's sort of like a vicious cycle, but it all accumulate, and the interest rate payments go up every year because of it. And maybe it's a cycle that just continues. And maybe it's a game, but it's a game I think we don't need to play.
Yeah, I mean, I agree with that. The interest payments are not well-targeted fiscal spending. So get rid of this, I agree. But I would also say that in the current setup, the government is not constrained by that. But apart from that, since you mentioned inflation, I think inflation is way, way, way more unpopular than unemployment, because inflation affects everybody.
Mm-hmm.
I mean, you can not everybody, because, you know, if you're a debtor or a creditor, it's a different perspective, but it affects more people than just the, I don't know, 10 million people being unemployed. And in that sense, a government which would be able to run an overdraft at the Fed or sell bonds to the Fed directly, and would overuse this capacity, creating too much aggregated demand, leading to inflation, would be very unpopular. So in that sense, democracy will take care of that.
Okay.
I have a comment and a question.
I had Lucille on set, or Paul, you still want to get in?
After, if Lucille has something, didn't know? Okay. I think we believe that controlling the money supply through interest rates is a very poor way to do it, and unnecessary and inefficient. I think the feeling is we should just do that directly. Having this kind of roundabout backdoor way of attempting, and as we discovered, it doesn't work as of late. where they dropped interest rates so low and banks are still not lending. And there's no reason for that. So my question is, does MMT claim that the government, at least the US government, operates this way now? That is, it spends and creates money in the process of spending? Or is that the way it should be? In other words, until last week, we never saw this level of the Federal Reserve creating money. Is this the MMT paradigm actually coming into existence because of the coronavirus forcing the Fed to take these extreme measures?
Well, first of all, I would say that there is no MMT paradigm that we could implement, but it's more a lens. But apart from this rhetorical nuances, I think that no matter how you set up the system, overdrafts, direct financing or indirect financing, the end result for the private sector is the same. If the government spends, it increases the bank accounts of the private sector. And in that sense, next to bank credit, government spending is a second way of money creation. It increases the amount of bank money. And we can talk about the horizontal relationship between central bank and government and how banks should be part of this. But apart from this institutional setup, spending creates bank money, and thereby government deficits are private sector surplus, and government spending adds to aggregated demand, etc.
So when you just use the term bank money, you're using that technically to refer to reserves. Is that correct?
No. Central bank government spending in the first instance leads to the creation of central bank money, but in the second instance also credits the bank accounts, so the accounts at the commercial banks. If I receive a payment from the government, my bank account goes up.
Their accounts at the Fed of reserves, or you're saying their accounts themselves?
Yeah, so no matter the institutional setup, government spending leads to an increase in commercial bank accounts. And that means the accounts of the bank's customers, so private sector accounts at the commercial bank.
Sure.
If I receive a payment from the government for cleaning the building facilities, my bank account goes up.
Sure.
With money or with credit?
No, money.
Money?
It's money. Yeah, government money. Yeah, sure.
Yeah.
The question is who creates it. That's where we run into the sticking point. The MMT
I got
claims that
Virginia on stack, and I'm sure seeing
sure.
her waving that she can put in something.
Oh, there she goes. Yeah.
Well, I'd like to go back just for a moment to when you were talking about the commonalities. We do share the idea that when banks create money, that the profit motive overrides all, and that's detrimental to society. It leads to exponential growth. It leads to all of the injustice, the transfer of wealth, etc.
Not all of it, but yeah, you're right.
And we seem to agree that part of the reason for the existing system, which allows the banks to create almost all of the money supply, is that it's essential income for the banks. So the system is subsidizing the private sector and participating in that transfer of wealth from the many to the few. So I think I understand how you want to read it. For us, debt is debt. You know, if I say I owe you, if I go out and use my credit card, I haven't made a formal loan and I may be using a line of credit, but it's still debt. I'm going to owe on it and I'm going to have to pay interest on it. And maybe I'm a government and I can just borrow some more money to pay the interest. But we're just playing with definitions if we say that's actually creating money. It's not. As you pointed out, it has to be created by the private sector to get to the government to spend it.
On this part, I disagree, because the government only spends government money, public money, reserves. The private sector, you and I, we don't have an account with a central bank, so we can't provide the government with central bank money.
So when the government puts money in your account for cleaning, do you get to spend it in the public sector?
No, I actually, well, this is where things get a bit complicated. I only get bank money, and the thing is also taxes can only be paid with central bank money. So even if you have just bank money in your account, your bank pays your taxes with getting its central bank account debited. So actually paying with central bank money.
Okay, but now we're getting into accounting conventions and definitions. If we're looking at the essence of that transaction, the essence of the transaction is the government gives you its token, which serves as money, and you use it in the public sector. So,
yeah, true.
Okay, so there's a whole layer where we can look at, you know, how we use definitions and what is reserve money and how it cycles and all of that. But the essence is you got paid by the government for doing work, right?
Yeah, true.
And the essence of our current system, I think in the US, the amount of spending that's done by government is something like 30–40% of the money cycling in the economy is from government. The rest of the money, and the money for that government spending, has to come from bank creation of money in the private sector so that bonds can be purchased and used by the government. I think where we kind of don't get it. I do not understand how you can take that fundamental process of on the balance sheet. I mean, I've read every single financial report of the US government since 1997, which was the first year we had a federal financial report, which is a jaw-dropping piece of information. But anyway, on the federal government's balance sheets, there is debt, there is interest payment on that debt, which currently averages about 3 or 4%, despite very low interest rates.
Yeah.
And we pay something like $600 billion a year out of tax income that's only, $2 trillion. That burden of taxes, of interest payments, which is a transfer of wealth from, it's this essential income for the banks. It's transferring wealth from the many to the few. What we find kind of bewildering is how you can take that process and describe it as money creation.
Well, you've mentioned a lot of points, but the most crucial one for me, let's pull a bit back, was that you've said, if I understood you correctly, that the bond issuance by the government, or government spending, if you will, is financed by private bank money creation. Is that what you've said?
Yes.
Okay. I think that's wrong, because bonds can only be purchased with reserves, with central bank money.
Oh,
But in our system, the central bank really is there to serve the private bankers. The central bank also to the private banks in reserves. So I see the creation of the central bank and its creation of reserves for the system as part of the private banking money creation process. It's not part of the government process. If it were part of the government process, which it would be that direct, the government actually creating the new money. And there's, yes, they could do it by removing any interest and the Fed directly buying. But what doesn't make any sense to me is if you're going to do that, then why not simply allow the government to create asset money? What is the point of having debt money that earns the private sector interest and transfers wealth? Why not just have asset money? You know, the equivalent of coins, which is how we deal with coins. The government creates it, it moves it into the economy. There's no interest attached to it. They're just assets. And dollars can be virtual assets that are created by government. They don't need to go through that fancy dance of reserves and interest and transferring wealth to the private sector. They're just asset money.
I think the fundamental difference here comes down to, because also I saw Paul not agreeing with a statement that that bonds can only be bought with central bank money. If you're not agreeing with this, then I can maybe follow your logic. But I think if you follow my logic and the proposition that bonds can only be bought with central bank money, and then you acknowledge that all the central bank money comes from treasury spending or central bank credit to the banks, then there is no way in private banks or private bank money creation financing the government.
Can you just say that whole thing again? I need a rewind.
Yeah. So if you follow my proposition that we have two different layers in the monetary system. We have central bank money and we have commercial bank money.
Right.
And if I understood you correctly, you say that commercial bank money can purchase government bonds, thereby financing the government. Is that correct?
Yes. To me,
Yeah.
for me, yeah.
Okay.
Well, and I'm saying that those two layers of central bank money are accounting conventions. They are not, in essence, it's the same in essence in terms of functionality. The difference are, just dance moves. But
yeah, speaking of it as money is maybe confusing, but if we think about it as central bank account and commercial bank accounts, and if you say that the commercial banks can increase the central bank account of the government by giving a credit to the government, then the necessary condition would be that the commercial banks can create central bank money, but they can't. It's only the central bank who can make IOUs on its own. The commercial bank can make IOUs and the central bank can make IOUs, but you need central bank IOUs to purchase bonds from the government. And then it's not logical to say that commercial banks finance the government, because they need central bank money, and all central bank money comes from treasury spending and central bank credit. Can you follow me?
No, why do we need the bond?
I propose to let that sink in, and we can address it later. But I have John still on stack. Maybe he has a piercing, clarifying question.
Well, I have a question sort of on a little different tact here. That help is out of the weeds and into the bigger picture here, because I'm trying to get a hold of this bigger picture. And what I understand is that what we have in commonality in terms of MMT and sovereign money movement is we both see the need for government to increase spending to meet social needs. That's certainly a commonality. And and you can argue that there are different ways to look at how this money creation process is going on. And it's certainly, whether you say the government is creating the money or the government is creating the demand for money, which is then created by the banks, these are turn out to be functionally equivalent, as you argue. Like just like the $1 trillion coins would be functionally equivalent of producing coins. That would certainly be government creation of money directly. But it seems to me that my understanding of the monetary reform movement is that in arguing that the government ought to create money in the public interest, it also makes the argument that banks have to stop creating money, because it's the bank's creation of money that inflation is an intrinsic part of. You can't have money created as debt without creating this exponentially rising inflation. So it seems to me that what monetary reform is saying is that, yes, like MMT says, we ought to have ways for the government to spend, but we have to stop private creation of money in the banks. Does MMT say that, or doesn't it?
Well, I think it's agnostic about the question private or not private. I hear Bill Mitchell saying in its book Reclaiming the State, we should go with public banking instead of private banking for the reasons that you've mentioned: pro-cyclicality, profit motive being the guiding principle, etc., inequality. And I would also ascribe to that. I'm sympathetic to the idea of public banking. But it's not intrinsic. MMT has no intrinsic position on that.
But
that's not what you said. That's not what you said, John.
Is a big difference between monetary reform and MMT. This business of our position that we have to end the private creation of money and have to have money created essentially publicly, so that it goes.
We have that already.
What's that?
We have already public money creation. That is when the government spends.
Well, that's the way you choose to define it. We don't choose to define it that way. We don't see it that way. But the fact is that doesn't matter so much. What matters is whether or not banks can continue to do what they've been doing to create the inflation and the whole process of concentration of wealth and so on. If we let that continue and just superimpose this government creation of money, however you define it, then we haven't solved the full problem. And it seems to me that if you argue that, yes, the government ought to spend money and then are silent about the banks creating money, then you do have a problem with inflation, because it's the private sector that has driven the inflation that we have seen over all these hundreds of years. So it seems to me MMT has to say that if it makes any sense to me.
Well, first of all, the difference is that MMT is not proposing reforms, but it's making sense of the current setup. And in that sense, MMT agrees with you that banks create money, that this money creation adds to aggregated demand and thereby can be inflationary, that it comes with the problems you've raised: inequality, pro-cyclicality, etc. But you have MMT proponents which talk about public banking. You have MMT proponents which talk about let banks still create money, but regulate them way more closely.
We tried that.
I know. And you probably should go about not say what banks should not be allowed to do, but rather just say them what they are allowed to do, because otherwise they will find their ways around that. But
that's a really important point, because regulation has not worked. You know, and the authors of The End of Banking make that point very strongly. Joseph Huber has made that point very strongly, that regulation in this technological age no longer works because banks can always find a way around it. So that's why, to have a simple conclusion that banks do not create money, that the end of fractional reserve is there, and what banks can do is do all the things that they normally do now, lending, but they have to lend money they actually have, and they can't participate in the money creation process.
So make banks intermediaries.
Yes.
Well,
Exactly.
you could argue for that.
Yes.
I mean, I think that's the essential difference is that, and you said it very early on in your comments, that we agree, this was your second comment, or maybe the first, we agree money matters. And then you say, we agree that banks, and you said, are not intermediaries.
Yeah, right now they aren't.
Well, currently they are not. And
Yeah.
so that crucial word, currently, they are not intermediaries. They are, I think our position, sorry, I'll lower the tone, our position, and I would think yours too, would be that they should be intermediaries of already existing public money. They should not be able to create what we use as money. They should be intermediaries. And we have to transition to that out of a few hundred years of the private banks getting control of the money creation process. It finally doesn't serve the interests except for the tiny percentage. But yeah, they should be intermediaries, but they're not.
Well, I agree they are currently not. I wouldn't fully ascribe to the fact that they, or to what you've said, that they should be. I think there are many ways. I'm sympathetic to not letting them be intermediaries, but the intermediary part would also then be just for the public money, right? Just as now shadow banks cannot create US dollars or US dollar denominated bank accounts. But as Hyman Minsky said, everyone can create money. The challenge is getting it accepted. So if I issue an IOU on my name, IOU 5 Maurice, that's money creation.
Well,
so you can't forbid money creation in that sense.
I'd like to correct that.
That's
That's credit creation. That's not necessarily money creation.
Well, yeah, it depends on where you draw the line between credit and money. Because if you say it's credit creation, if say the supermarket issues gift cards, so that is basically it issues IOUs, but obviously we don't consider this as money. But
Right.
it is literally, it could be money if it would be accepted, right?
That's the critical point. It becomes money when it is accepted by the full community.
By everyone, correct.
That's
Right.
Definition of
started
what
out with money.
So your IOU, if we all said we are going to make the Maurice IOU our national money, now it's money. But if you just say, I've given you, here's my IOU, that's not money. As John pointed out, that's just credit. So it is simply not true that anyone can create money. They can't, because the public has to be the ones who agree to use it as money, and then it becomes money.
following your definition, I would agree, but the question is, where do you draw the line between credit and money? But that's a definition question. But this brings up another interesting point, because you say, I think it's on the website, that money is accepted. I accept US dollars because I know that you accept US dollars, right? That's basically the proposition. There is some form of trust, and everyone has to agree, and then money gets its value and is being used as medium of exchange, store of value, blah, blah, blah.
Well, there are kind of aspects to that. There's one, the authorization and the authority behind the money, which is that however our government works, whether it's a dictator or a collaborative, when all of us say the Maurice is going to be our money, then we have made it the official money. The other is the trustworthiness of the money, and that really has to do with whether we believe Maurice is, gonna hang around and that money is going to have value. So, I mean, they're very closely connected, but they're kind of two different ways.
MMT is rather on the first part, money being a creature of the state and being higher in the hierarchy because it has the government backing the public money. But the interesting question is, what is the rationale of having public money? And from an MMT perspective, this is if you agree that there are public tasks that have to be performed by a government, the government needs resources. It needs the labor of the private sector, it needs certain goods, certain services. Public money, in that sense, is a market solution for the provisioning problem of the government, because public money allows the government to purchase labor, goods, and services from the private sector in order to fulfill its tasks. So in that sense...
Money does. And money is exists publicly. It exists by the recognized authority of a people to say, this is the legal tender of the land, this settles all prices and debts, public and private, and we accept it as well for back in taxes. And that's simply it, that's money. And the government creates it, spends it into circulation or however it distributes it, and it then exists forever and circulates.
It exists until it's being drained by the means of taxation.
Some of it, not all of it. A very small little bit, but it circulates, and then taxation, it gets spent right again into circulation for the public good.
Yeah, I just wanted to point out the difference in arguing that, well, from an MMT perspective, levying a tax liability on your society, thereby creating demand for your currency, and then providing your public money in order to purchase the resources to fulfill your tasks, is way different to the concept of public money is accepted because anyone else accepts it, because that's circular reasoning. I accept it because you accept it, and you accept it because I accept it.
What about people who don't pay tax?
Sorry?
Hold on, let's
go ahead.
Deep little thing. Mark wanted to butt in here, but he's also on Stack. So I want to give the word at this moment to Mark.
Thank you, sir. I think that Mary actually asked a very good question. And to me, this is all about MMT defining money as debt, and that it can't be anything else but debt. And so that seems to what drives all these arguments, is that MMT looks at the current system as money is always created as debt, which is absolutely correct. There's no question about that. But Mary asked the question, do you yourself acknowledge that money can be created as a public asset with no interest or debt obligation to pay back? That's a question.
Even if we would abolish bonds, so no debt issuance in that sense and no interest payments, and if we would enter a cash economy where the government prints coins or notes and issues those notes, those would be accounting wise, they would determine a liability of the government.
They would do what?
They would be those would be held at the liability side of the government's balance sheet.
That would make it a debt. We're saying create it as an asset. You don't have to. We're not going by accounting principles, as kind of like Virginia was mentioning. You're just creating it as an asset. There is no debt obligation. It's not a liability. It's money that was created as a public asset for use to spend into the economy, that does not have to be paid back, that does not have interest on it. Do you acknowledge that that is possible? Because that's what sovereign money is about.
And it can be a number in an account. It need not be a coin or a piece of paper.
Yeah, fine, but from a logical perspective, it would be a liability, not an asset.
No.
And even if it is a liability, that's nothing that has to be paid back, right? The government can just run infinite overdraft on its own
No,
balance sheet.
it's not even. It's not even put in as a liability. It's put in as an asset. It's only an asset. You're going back to accounting principles, which I understand, because if you look at this entire economy as money is dead, then you have to look at it the way you're looking at it. We choose not to look at it that way, and we think that we actually know you can do it another way, because you can. And so that's what we're suggesting, is that that's much easier than going through the gymnastics of what you have to do to try to get money into the current debt system. For
maybe to give another angle to this, if we are involved in buying and selling in the economy, right? If I go into the supermarket and buy whatever, bread, then in the moment that I choose the bread and take it with me, I enter a creditor-debitor relationship. I owe the supermarket the payment of the bread, and the supermarket owes me the delivery of the bread, if you will. So the whole process of commerce, and that goes back to Mitchell-Innes, is about creation of credit and debit. Selling and buying is about credit and debit, about claims and liabilities. And
that works fine in the private economies, but I don't think we're suggesting changing that. We're talking about where money comes from at its origin, and whether or not that has to be debt or not. That's what we're talking about.
Right. Well, a nice quote from Innes is that, when going with a supermarket example, when a creditor wants his debt paid, he usually means that he wants to change his debtor. That is to say, he wants a credit on a banker or on the government, if you will. So the very nature of money is debt. There's no way around.
This is our critical difference with MMT right here. Now, I'm sorry it took so long to get to it, but hold on, Stephen. This is the critical difference, is that
all right,
we are not saying that there needs to be an elimination of debt entirely. That's not the issue. And what you're talking about is in the private economy, where we will definitely say, yeah, you need debt to get a home loan. We understand that relationship when it comes to that point. But when you're talking about we the people, do we the people have to have debt just to have money as an asset? We say you don't. And so we're talking about the source. We fully acknowledge that debt will exist in the private economy.
Okay, even if we abstract from our accounting view, and I go with your example of the government having, let's say it just rents an overdraft at its bank account. So it's not a cash economy, but it just injects or increases bank accounts in the private sector, right?
Okay.
It can do so right now, and there is no need of being paid back because it's government issued money. It's an IOU on the government. It comes from nowhere.
Stephen Stack.
Okay, Mark, you still want to pitch in there or pass it on to Stephen?
No, let somebody else go.
Okay, Stephen.
Yeah.
Hold on, I do want to say that we have 1 minute left. So.
Okay, hold on then. So we started later, about half an hour. So if we want to stop in 1 minute, we close it down. I propose we go on for half an hour to make up for.
No, I don't mind going over. I'm saying this was a scheduled meeting, so I need to make sure that it's just not going to cut off.
Oh, okay.
Off as far as I know, Mark.
But it's also premised on the idea that Maurice is fine with sticking another half an hour.
Okay. We'll just keep going. If it cuts off, I'm sorry, but I don't know all the new Zoom rules, so continue on.
Maurice, are you okay with another half hour?
I have 20 more. I have obligations afterwards, but I have 20 more.
Okay, we'll go on 20 minutes. Stephen, have a crack at it.
Okay. Maurice, in the history of this country, when we had our Civil War, they just did the last example of what you were talking about.
Greenbacks.
Yeah, the greenbacks, and the government put money in bank accounts, and the accounts that received it were those companies that were producing munitions, cannons, uniforms, et cetera, et cetera. And it was able to run $450 million that way to win a war. And there was no debt related to that money. And it didn't overissue. It might have wanted to have issued 1 billion greenbacks, but it stopped at its legal authority that it gave itself at 450 million. And it took a little while, but within some years, and it happened pretty closely to a few weeks, the greenback started trading 1-for-1 with gold at its proper price, at its commodity value of $1. And so, and what how I like to look at this from maybe a non-MMT point of view is that this is something like what we might call positive money, or thinking of positive money in England for now, for example. But it's not associated with any debt. The government didn't have to pay gold later, didn't have to pay silver, or didn't have to do anything else later. And there was a lot of push to keep this type of money going. And what happens from our perspective in monetary reform is if you attach an interest with those bonds at about the rate of interest, it concentrates money into fewer and fewer hands. So that's our basic problem. I have that one question, and since we're getting near the end, and I'll shut up after this. My second question is, are you in agreement with, how would you feel about if everybody had a bank account at the central bank? So everyone had its central bank digital currency account. But anyhow, those are my two thoughts to share.
Yeah, interesting that you bring up the greenbacks. Well, my take on this is this is basically what we have right now. If we would abolish bonds, right, and would thereby abolish interest payments, then we would have the same system. The government spends, and there is no promise to exchange for gold, for foreign currency, for anything. The only promise that goes with it is that the government accepts its own currency for
taxes
and fines and dues and whatnot. So basically back in payments to the government.
Mm-hmm.
So, and that's basically what we have right now. So no need to reform absent the bond thing. And you can even have bonds and not pay interest. If you want, well, no need for that. And actually, MMT argues, Warren Mosler most prominently, for a permanent zero interest rate, right? Abolish bonds and just if the normal case is that the government runs a deficit, so there is a surplus of reserves in the interbank market, and a surplus of reserves means that the price of reserves goes towards zero. And if the government doesn't pay interest on central bank deposits, the natural interest rate of reserves is zero. So just let the interest rate go to zero and leave excess reserves in the system. For your second question, what was it again?
Central bank digital currency.
Oh,
and
yeah.
Everybody have an account there, and that would be another way to put us all on one tier if everybody had that system, and it's sort of akin to public banking at that moment.
Yeah, doable. Yeah, fine. And right now we have the system that public money for public projects and private money for private projects. But yeah, you can argue for having an account at the central bank.
But how about you? Would you argue for it?
About myself. Well, essentially, that's what public banking would mean, right?
It would be one approach, yes.
No,
The central bank, you could still have public banks. You could have I'm still thinking of like Germany with its municipal banks, its rural banks,
Yeah.
and keeping that type of system that's beyond the central bank.
Yeah, true. Yeah, I'm very sympathetic to the German system. Yeah, having small, decentralized banks who have personal relationships with their customer and do narrow banking. Yeah, fully regulated. Yeah, they were also fine during the financial crisis, by the way, most of them. So keep them small and decentralized.
Yeah, it keeps money in what some people like to call the fringes of society, or to the other areas of society, away from the central locations.
Yeah, yeah, fine.
I have Paul on stack.
Right.
Paul, it's Virginia, and then I'll take claim stack. Paul, go ahead.
Yeah, I want to talk about the concept of debt. We have a resident curmudgeon, he's not here today, who always admonishes us to read the works of Frederick Soddy, which is written, have you read any of his stuff, Maurice?
Nope.
It'll blow your mind. This guy completely understood the concept of money. And in fact, the language that monetary reformers use today is almost verbatim what he was saying 100 years ago. There's some confusion in terms of using the word money as debt. He completely agreed that money is debt, but it's in the opposite direction. Money is what society owes the bearer of that money. It's the debt of society to the IOU that I hold in my hand in the form of a dollar bill or my bank account. So in that sense, money is debt, but not in the, so in that sense, it is an asset. It is an IOU that we hold. The society owes the bearer. And that's a concept that often gets confused when we just throw around the word money is debt. So I just wanted to point that out.
It's kind of abstract to say that it is that society backs it, right?
You could say what society owes you. It owes you. You can go to any, well, not anybody, but you can purchase their goods and services if you have that IOU. It's kind of a generalized IOU. And in that sense, money is debt that society, in a sense, owes to itself.
Where does or how come that society accepts money? Then that's another.
There's some historical validity to the story that MMT puts out, that it was to taxes somehow validate the money. I don't think that's the case any longer. I think we've gotten beyond that. I think money now is so ubiquitous, and it's a matter of public trust that really validates the money. Yeah, whether the government accepts it in taxes or not. If we lose faith in the dollar, you know. So I think
you couldn't live without accepting the dollar, because right. So in that sense it's a necessary condition, but it's not the satisfactory. Is that right? Speaking in mathematical.
Sufficient? You mean sufficient?
Sufficient, yeah.
Yeah, I think the tax story historically was true. I don't think it's as true today. And but that is what MMT will always say, that, you know, as you said, Minsky says anybody can create money, but I think that all of those stories have some validity, but things have gotten beyond that now. Money kind of has its own existence.
Imagine you are a local government and you want to, since you're a currency user, you're using the dollar, you can't create the dollar yourself, so you have a financial constraint, but you want to get rid of it. So you want to introduce parallel currency. You want to introduce your local US dollar or your power dollar, say, right? How do you get it accepted? What do you do?
I don't know if you could get it accepted.
Well, I think since local governments also collect taxes or take state governments, whatever level, as long as it is not the federal government, tax liabilities could still work, right?
Oh, I think so. I think that's true. I mean, that's the way that it initially gets enforced. But once
Yeah.
it's accepted, it's
No,
accepted. It's got a life. It's got a life of its
it goes
own.
its own way. Yeah, true. Agree. Fully agree.
Okay, that's good.
Can I just add one sentence?
I want to go on to Virginia. Virginia is next on the stack.
Well, I wanted to just go up to the 35,000 foot level for a minute. And it seems to me that one of our frame differences is that MMT is framing this as a dichotomy, government and the public, and the balance sheet of asset and debt. So in some ways, that's not a new perspective. That's a very old conceptual way of framing relationship. And that a truly new, it's not new either. I think it's evolutionary. That the next stage of the way we view the world is that we see it not as me, mine, and you, yours. We add we. So we have I spending, which is, the money you give me and the money I spend, and we have we spending, which is what we as a big community choose to circulate amongst us for the public good. And I think that's a really important perspective to have. And I think that's part of the grounding and foundation of the money reform movement.
Yeah. Maybe.
Is that a question or is that just a general remark?
It's just a general observation, and I don't know whether that resonates for Maurice or not, that is part of that the foundation of his framing this government is an entity and the public is an entity, and you can put them in separate boxes. Because I would say you can't. You have I spending and we spending, but it's all, it circulates and it's all part of a system. You really can't. And that is part of the problem when we do separate it and say, oh, look, when government spends, the private sector's income goes up and they benefit. Isn't this really wonderful that the government goes into debt so that the private sector can benefit? We don't need to do that. It's just not necessary. It's a less clear way of looking at the circulation.
Maurice, you want to?
Well, I don't know whether I fully grasp it, but I could say that, again, the rationale for the government to have its own currency is to mobilize resources to fulfill its tasks. So it's a market solution for a provisioning problem. Without the public currency or without public money, it could just enforce so by, I don't know, soldiers or anything else, but it just uses money to mobilize resources. But since the taxation issue was brought up in the comment section, and Paul also mentioned taxes before, there is a risk of misunderstanding MMT in concluding that MMT would propose to abolish taxes or saying that taxes were not important. For MMT, taxes are important, but not for financing the government because, well, if it spends first and then collects in taxes don't finance, so they have no financing means. But still, tax is super important. First, as we've said, create demand for your own currency. Second, address inequality. Third, to manage aggregate demand because taxes drain spending power from the private sector. In the same sense that spending increases the bank account of the private sector, taxes decrease or debits the bank account of the private sector. So spending adds to aggregated demand, taxes drain from aggregated demand. And fourth, to address behavior. So taxes are definitely an important part. And since we have unemployment, you could argue that, well, let's increase spending or lower taxes. The fiscal multiplier might be different, but, well, that's a political argument. Technically speaking, both would be fine.
Okay, guys, we got 5 minutes left, which is not that much. As I was on stack, I just want to make a few general observations. The first thing is with MMT about its descriptive versus prescriptive role. That there are MMTers who are saying we're only describing the system as it works now, and that they don't pretend to say that, you know, that there are policy implications. Then I think there are people in MMT saying, no, you know, we have to, as we understand the system, we have to stretch it such that we'll have, you know, solve unemployment, but not such that we have inflation. So that's where the taxation comes in. So that's about, you know, this tension a little bit within MMT between prescriptive and descriptive.
Yeah.
The other thing is our proposal, as far as I understand Huber and his analysis of the double circuit system as it works now, where you have bank money for the commercial section and you have, you know, federal money or state money, that's the reserves, that's the two circuit system. I'm starting to understand that MMT kind of keeps that in existence, and indeed then will try to make all kinds of calibrations to make it work for the social good. As far as I understand Huber says when you go to a sovereign system, you go to a single circuit system. There is no more bank money versus commercial money. It is all the same money. And it doesn't matter for me whether, you know, you have accounts where you have a debit side and a credit side, and then you kind of can say, well, therefore money is debt. Or you say with us, no, it's all asset money. At this moment, I think that's only semantics. The big thing is this change from a single system or double circuit system to a single circuit system, and also such that banks cannot then create their own money, because in a single circuit system, there's only one asset flowing around, and only the government within certain bounds can add or subtract to that flow, but it is a single flow. Okay, that's what I want to say, because we've got 2 minutes left, and I have one person still on the stack, and that is Mark. I'll give Mark the word, and I'll let him also otherwise finish this session.
Okay, I just wanted to ask one thing on your thoughts, because one of the main problems I see with defining money as debt is the strain that it puts on developing nations. Just like Walmart can go borrow an unlimited amount of money, or Apple can go borrow an unlimited amount of money because they have assets on their books and they have a good balance sheet. The same is true for a nation that's developing. The reason that this is so important to a lot of us is because the United States, as the world's largest economy, obviously we can borrow, and I agree with MMT that says that, well, we're not borrowing as much as we could borrow if we want to borrow to do good things for people, and that the debt
says they're not borrowing at all. But go ahead.
But that the debt doesn't matter as much as people say it does, and I agree fully with that. The problem is, though, if I'm a country in South America or a country in Africa or some poor nation, this is where it breaks down at, is because I don't have the assets. I don't have the tax base that will allow me to sell bonds on the open market or anything else. So it's the same thing that keeps nations poor and allows those poor countries to be taken advantage of by global corporations, who then they need them to come and invest in their money. So instead of me being able to build a desalination plant to curb off water shortages, with asset money being created by my own government, guess what I have to do? I have to find some multinational corporation that's going to come in and build it, charge for the water, take all the profits out the country and leave the people poor. That's the problem with debt money at its source. And so I just wanted to put that out. And it wasn't really a question. I just wanted to kind of end with a big statement.
Okay, Mark, as that's a statement, and we're at the 1:20 mark here, Central Time in the United States. What time is it at yours? 8:20, 7:20?
8:20.
Okay. I thoroughly enjoyed this. It did not necessarily solve, but I think in the bridge building, there are elements being proposed that can, get us somewhere in the same boat again.
Yeah.
I'm thoroughly convinced that we're aiming at the same thing, and that is social justice, and that we also, with every big academic debate, it's also about developing hypotheses that can be tested. So, for example, I'm not totally sure that Kelton's 1990 seminal paper of Texas don't fund expenditure has been thoroughly tested. I tried to find out who did so, and I didn't find anybody. And at this moment, I find it has become almost an article of faith. So I'm looking for hypotheses to be tested, the same way Werner did with the testing of the bank theories. And then he went to this German bank and followed all the steps that were taken to find out, yes, the credit creation theory of money and banking is the correct one. So that's where my mind is. We might not find out on a semantic level, who is right. It will be the proof is in the pudding. It's in testable hypotheses. So somehow I'm looking forward to that. With that note, I want to very much thank you, Maurice. Dankjewel, dankeschön. It was a great treat to have this nice conversation with you. I've had some people asking, can we do this again? To which I'm not against, but we have our own, rhythm with these coffee houses. But if you think we treated you kindly and right, and you want to join us again, we'll set up again something and continue the conversation. What I will do together with you, usually I make a so-called study stack of the conversation. That's like, we'll put some sources and links and maybe a little overview that people can consult to go a little deeper, and maybe also might be nice for people that didn't make it to this session. But we'll email about that. By that, I'm just putting the hammer down. Say, have a great weekend, everybody.
Well,
I'm not yet closing. Anybody who wants to go, goes. If anybody wants to stay, stay.
I think Maurice was going to make a final comment, were you?
Yeah, true.
Go ahead, please.
Very much appreciated to set it up and to have this debate. From my side, I love debating and I love that intellectual exchange. So if you want to set up another meeting, I'm definitely down for that. What would be super interesting for me, and a proposal from my side, I would deliver a balance sheet exercise where I clarify how the government, maybe even the US government, spends at the moment. So how it does spend right now. And if you could provide me with a balance sheet or the accounting of how government spending would work in your world, maybe using my framework that I will deliver, this would be super interesting and help my understanding of how would you perceive or construe this asset-based money approach.
Yeah, this modeling would be wonderful. That would, and it would give us, put a picture to everything and help give us a common language too. Great idea.
Yeah.
All right.
Okay, cool. Yeah, then I will, I think I will send my version to Govert, and he could distribute it with you. And then maybe you can use my framework and just use it in this asset-based approach.
Awesome.
That sounds good. And we'll find our finest accountant within our group to set up our.
We might have to make it a team effort.
Well, small team effort.